Hello and welcome back. Pepe has absolutely exploded over the last 24 hours and over the last couple of days. In this video, we're going to go into why that is and whether or not that move can be sustained. But first of all, let's take a look at the market as a whole, because the situation today is not the same as the situation was yesterday. Let's jump right into it by looking at Bitcoin. So as you can see, we're currently sitting at around $65,500, having broken through that key level of resistance that we were talking about at $65,000, reaching a peak of $66,500 and now coming back down to test 65K again. As we mentioned on the last video, that 65K level was a very, very key psychological level, and breaking of that would mean that we are now in an uptrend from the lows on the 5th of August, which puts us in a great position to go and take on the next high, the next significant high up at $70,000, which would then, technically speaking, break the downtrend that we've been in since the all-time highs. As we also described in the last video, there was a lot of sell-side liquidity upside from 65K, and the peak of that was actually at $66,500. I'm going to insert the clip from the last video right now. There is a lot more sell-side liquidity at prices above where we are right now than there is buy-side liquidity at prices below where we are right now. The peak of sell-side liquidity is living up here somewhere around 66.5. And sure enough, around 24 hours later, we reached a peak of $66,500 and then sold off back to where we are now at around 65.5. So just upwards of $1,000 move, around 1.66%. Reminding us, as ever, prices don't move because of lines drawn on a chart. Prices move because of supply and demand. And the best way to take a look at supply and demand for the future. Now, of course, orders can be pulled. The order book is not a guarantee of what supply and demand is going to look like in the future, but it is the best indicator that we have to look at the intentions of market participants. Now, if we look back to the order book, looking at book maps here again, we can see that asymmetry that we saw in the liquidity yesterday, i.e. thinner liquidity on the buy side below where current price was and thicker liquidity to the upside of where price was on the sell side, that disparity has kind of evened out now. So we can now see fairly evenly matched buys and sells stacked up in the order book. Those are limit orders waiting to be filled when the market price falls or rises to those levels. In fact, that is rather skewed to the buy side right now, with the edge of the liquidity to the buy side kind of coming in at around $64,500. Now that's all looking pretty good, but if we look over at the liquidations, once again, as we know, there's a lot of leverage in this market. There's a lot of euphoria in this market because, as we can see, the fear and greed index is now elevated again versus yesterday, up at a 64, and people love jumping into the markets with money that they don't have when they're feeling euphoric, when they're feeling greedy specifically. That means leverage trading. That means the potential for those trades to get closed prematurely, i.e. liquidated. So if we look over at the liquidations map, we can now see around $1 billion worth of liquidations on the long side. That is long positions that are going to be liquidated if prices fall below a price of around $64,500, which is just about where the liquidity runs out, at least in the order book to the downside. And if we look at our charts, that kind of marks a price point just below that key level at $65,000. Now, what that signals to me is a lot of participants in the market kind of playing the obvious trade, which is resistance turns support at that 65K level. So look at this. Price came up, tapped that 65K level down, tapped that 65K level down again. We had this whole sell-off. Price came back up, tapped that 65 again and again. We flipped it over the last couple of days. And that basically gives us this really kind of obvious trade where price might fall down and then bounce off that former resistance level, now turned support, and continue to the upside. The problem with that is it is almost too obvious. So obvious, in fact, that bigger players, stronger players with more money than you and I can manipulate markets to their own advantage, i.e. put in a lot of orders in the book, showing great sell-side liquidity like we were showing up here at those slightly elevated prices, and actually push the market below the level where retail traders feeling euphoric, feeling greedy, have positioned themselves such that they will be liquidated. That's a scenario I can really see happening here at those prices just below $65,000. Now, the same is true somewhat to the upside, as we can see here from the exchange liquidation map. Around $1 billion worth of short positions waiting to be liquidated at $67,000. That $67,000 level is kind of our next important point of resistance to the upside. But as we know from yesterday, there's a lot of sell-side liquidity up there. There's a willingness of stronger hands in the market to sell. Although we do see some of that thinning out, perhaps as some of that liquidity has been soaked up from yesterday's buying. So in short, to sustain this move in the short term, the bulls really need to protect that 65K area. The liquidations really get pretty spicy below that, and then all the way down to this key level that we were talking about in the last video at around 62.3. Just to check the liquidations map again, anywhere kind of below 63, we're looking at upwards of $1.5 billion worth of liquidations. Really anywhere below that is the golden scenario for me, to be honest, where I'll be looking in to get to the market again. Some sort of move like this, where we end up liquidating longs here, coming back down into that 60K range, and then pressing on upwards from there. That would be a great scenario as a buyer, but not necessarily something that we're going to see. Capital does continue to flow into the market on both the retail side and the institutional side. Over the last couple of days, the Bitcoin spot ETFs have seen inflows of $365 million on the 26th and $494 million on the 27th of September, marking now 7 consecutive days of spot ETF inflows. And just yesterday on the 27th, ARK's fund actually topped out at $203 million worth of inflows into their spot Bitcoin ETF product. Now, spot Bitcoin ETF inflows basically represent the willingness of institutional investors to buy Bitcoin. I don't necessarily trust any old institutional investor to buy Bitcoin and to hold on to it. Certain investors, however, I do trust to buy Bitcoin and hold on to it. One of those being MicroStrategy and Michael Saylor. They've been acquiring Bitcoin in September as well, to the tune of apparently 7,420 for a purchase price of approximately $458 billion. MicroStrategy now holds an aggregate of approximately 250,000 Bitcoins, around 250,000 Bitcoins, with an average purchase price of about $40,000. That puts them in around $7 billion worth of profit since they started accumulating Bitcoin. Now, a lot of this buying has been spurred on by news, fundamentals. As we know, the US recently started their rate cutting cycle with a historic 50 basis point rate cut. More positive macro news coming out of China. As you can see here, CoinDesk, Bitcoin prices show positive 30-day correlation with China's central bank balance sheet. Bitcoin's price has been positively correlated with the size of the People's Bank of China balance sheet over the past 8 years. The PBOC is considering a massive stimulus of up to 1 trillion yuan, approximately $142 billion, to bolster its economy, leading to a surge in Asian stock markets, including a notable rise in the CSI 300 index, China's version of the S&P 500. As we know, money comes into the economy and going into risk assets. Risk assets are correlated with Bitcoin. On top of that, we saw today Binance co-founder CZ was freed from prison after 4 months. Binance obviously being the biggest crypto exchange on the market. What's good for Binance is good for Bitcoin, is good for crypto as a whole. So what has all of this got to do with Pepe? Well, Bitcoin obviously being the largest crypto by market cap acts as a great proxy for the market as a whole, but not all money coming into the market goes straight to Bitcoin. Let me demonstrate this with a couple of charts. Looking at the market cap of Bitcoin, we can see an increase from around $1.25 trillion up to around $1.3 trillion over the last 7 days. Conversely, looking at the crypto market as a whole, we can see an increase in market cap from around $2.3 trillion to around $2.42 trillion over the last 7 days. More money has come into the crypto market as a whole than has come into just Bitcoin alone. Where does that money go? It goes to smaller caps like Pepe. Pepe has seen a rise in price of around 87% since the start of September. And just in the last couple of days since Bitcoin started breaking that key 65K level, it has seen an increase in price of nearly 40%, bringing Pepe up to a fully diluted market cap of around $4.6 billion. That makes Pepe the 21st highest ranking crypto in terms of market cap. So up 33.33% over the last 7 days, up 2.12% over the last 24 hours, also 21st out of all of the crypto tokens. And look at this, perhaps most impressively, also 21st out of the whole crypto market in terms of trading volume. So can this move be sustained? Well, first of all, from a technical perspective, we're kind of coming into resistance, but I think the key here is for Pepe and for the other smaller caps and for tiny micro caps that are yet to be discovered by myself or by others, is that the tide rises all boats. As you can see, just in the last couple of days since Bitcoin started breaking out of that 65K key level to the upside, Pepe is up nearly 40%. So if Bitcoin keeps breaking to the upside, if money keeps coming in, and crucially, if we can make that all-time high, that's when serious FOMO kicks in, and that's when serious money starts flooding into the crypto markets and things start getting really crazy, we could see absolutely astronomical gains in the smaller caps, like Pepe, like other memes, and that's when things could get really, really exciting in the crypto market as a whole. Now, of course, it's not always going to be a like-for-like ratio at every price point, but what I'm talking about here is essentially a 6.3% gain in Bitcoin, getting investors excited, getting money coming into the market, resulting in a 40% gain in Pepe. But crucially, for the fun to continue, we need to maintain these key levels in Bitcoin, starting with 65K. And for that to happen, this rather fickle fear and greed index needs to stay on the greed side for as long as possible, and money needs to keep coming into the markets. To be honest with you, I'm pretty skeptical about that 65K level. As I say, for accumulating Bitcoin, I'm looking for lower prices from here, but it's all going to play out in the consolidation over the next couple of days. As ever, thank you so much for watching. None of that should be considered financial advice, just my opinion for entertainment purposes. Plenty more to come. Catch you in the next one. Cheers.